right.
Hello, everyone. Welcome to this edition of BizPod.Ninja Episode 2. I've got a super special guest here today. One of my dearest, oldest friends, Fritz Landman. Hello, Fritz.
Hey.
Fritz Landman is the CEO of ClassPass. He's also a prolific angel investor with investments in Square and Pinterest, Wish, Flexport, Formlabs, among others. He's probably done at least 100 investments over the past decade. Fritz started his career at Microsoft after getting his bachelor's degree in history from Yale. He rose through the ranks to become one of the youngest directors in Microsoft history. I was there, I can attest to that. He was the go-to guy for many things corporate strategy and mergers and acquisitions, and led the $240 million Facebook investment in 2007 when Facebook was only worth $15 billion. To give you some context, that's about 45x as of today. After Microsoft, Fritz founded and was CEO of Livestar. Livestar was a mobile-based recommendation engine on food and culture that sold to Pinterest in 2013. I consider Fritz to be a preeminent business ninja in all things from startups to investing. We explore his kernels of knowledge and wisdom on this episode. He would give Master Splinter a run for his cheese, so to say. Thank you, Fritz, for joining. How are you today?
Thanks for having me. It's great to see you. It's great to be here.
Thank you. How are you just in general dealing with Corona and COVID personally? I think the U.S. is slowly getting out of it. How have you been holding up, Fritz?
Yeah, well, we're lucky. I'm personally lucky, and professionally, I guess, unlucky. Personally, my family, I live in Montana, as you know, and Montana's been a great place to ride out quarantines and sheltering in place because it's naturally social distanced. There's a ton of outdoor stuff to do, and the governor has taken a really strong, aggressive response. So we've actually had the lowest COVID per capita of any state. So we've been lucky to ride it out here, but so that's been great. Professionally, I don't know, I'd say running a fitness company during a pandemic wasn't high on my list of career aspirations, but here we are, we're getting through it.
That brings me into my first main question for you, topical question. And for the viewers here today, Fritz is just a wealth of knowledge, both in startups, but he's a master in the health and fitness and wellness industry. Obviously, he's a titan in his own field. Obviously, ClassPass, everyone knows, it's the unicorn. Fritz, can you tell us how COVID has affected startups, and more specifically, how has it altered the world of health and fitness?
Yeah, I mean, it's been, had a pretty insane impact on the industry. It's been catastrophic for offline fitness and a strong tailwind for digital fitness and online fitness. In startups in general, I think all COVID's doing is accelerating trends that were already happening. Migration of commerce offline to online. Things like food delivery and grocery delivery have all obviously been buoyed by this stuff. Telehealth, I think, is accelerating. So it's going to be good in the long run. I think some of the regulatory issues that have been in the way of some of the innovation in the ecosystem have been removed. And more importantly, just people are trying out things like Zoom, things like Instacart, things like telehealth. And so hopefully some of that will be here to stay because it's much more convenient. In fitness and health specifically, it's the same, in a world where your gym or your fitness studio is shut down, people have had to adapt and figure out a new way to work out. I think a lot of people have stopped working out and just consumed copious amounts of wine at home.
I fallen into that trap, and I realized I may not be, quote unquote, a social drinker during COVID.
Exactly. It's been interesting. I think there was already obviously a strong emerging connected fitness, industry, right? Pioneered, Peloton really in the interactive space, but, remote at-home fitness has been going on since the dance videos in the 80s. And P90X and stuff like that have been nice businesses. Beachbody, et cetera. So it's not really new, but the connected part and the interactive part is new. And I think a lot of people have started to adopt connected fitness platforms, to see if that works for their routine. What's been interesting, what we've seen that's interesting with our data is there's some customers who just are 100% into connected fitness. They don't want to be in a gym or a studio environment. Maybe there's some social embarrassment stuff that's getting in the way of that experience. So they love the at home because it's isolated and super, super convenient. There's another customer who doesn't like to do any at home. They only want to be at a gym or at a fitness studio or with a trainer. And then there's, a big concentric overlap, I think, in between of people who like a hybrid, right? So I have both. ClassPass helped me lose a ton of weight because I was out at fitness studios and gyms, and the variety in my routine really helps. Like doing boxing one day makes me more likely to lift weights the next day. But now I've adopted, some at-home stuff into my routine. So I think the future is heterogeneous. I don't think there's some like permanent structural shift, but certainly people have had to get creative with their workouts and how they measure health and fitness at home.
And that brings me to my next point. By the way, for anyone watching, and Fritz knows this, I've been on ClassPass for years. My fiance as well. Most of my friends. I absolutely love it. So I finally found out that it just turned back on in LA, I think yesterday or the day before. So I'm starting to use ClassPass in person as well for gyms. But in the past few months, you guys have built, I think you guys have pivoted a bit to also address that at-home fitness segment that you mentioned. How has ClassPass, in your mind, captured kind of the folks that want to work out at home during COVID? And then how are you pivoting so that in a post-COVID world, you address both of those audiences? Or are you primarily going to keep ClassPass kind of pre-COVID focus? What's the strategy?
Yeah, it's a great question. We've always believed that ClassPass would need to provide both digital and offline solutions. That again, the future is heterogeneous. So the core notion of ClassPass is that the best workout routine for each of us is different, right? For some people, it might be hitting weights every day at the gym. For others, it might be a cardio-centric routine. For me personally, it's a hybrid of some boxing, some cardio, circuit training, and some weightlifting. Each person has their own permutation. That's the optimal sort of experience for them. And that same, rather than being prescriptive, we just try to give people the choice and the options and let them curate a routine that works for them. That same principle adheres not only to what genres of fitness people engage in, but also digital and offline. So we always thought we would have to do it. And 2.5 years ago, we actually launched a live interactive heart rate monitoring product called ClassPass Live. That was really a test. Yeah, it was mostly an experiment because what we were going to do was build a platform for the brands to easily launch their own connected fitness channels without having to write a line of code themselves, since that's our expertise, not theirs. Ultimately, we sunsetted the project because we decided we didn't have enough bandwidth to focus on globally scaling our offline business at the same time. So we went from 4 to 30 countries. We launched a corporate program. We have added wellness, so massage, cryo, acupuncture, med spa kind of stuff.
I use some of those.
So we focus on that. Yeah, good. Yeah, it's great. It's a great way to use your credits if you haven't used them all for workouts. So, but with COVID, I mean, in 10 days, 95% of our partners were forced to close their doors. And luckily, we are well capitalized and had just raised in December. So we were able to afford to just put everyone on pause and say, hey, we're not going to keep billing you while we have this period of downtime.
How much money did you raise? In the
we raised $285 million in December. Yeah.
And which series
Better
was
to be
that?
lucky than good. That was a Series E.
Series E. Wow. Just
so
before
because of that,
pandemic.
Yeah, that was lucky timing. And because of that, we were able to auto freeze everyone's accounts and say, hey, you can still use your credits. And then we spent 10 to 14 days, we launched a new video product, as you've seen. And all that's doing is it's basically just a booking and monetization system for instructors or fitness brands who want to launch Zoom, Facebook, YouTube classes, and they can use us to have people book and pay for it. So we basically just moved what was happening offline digitally, and that's been going pretty well.
Got it. How will ClassPass be stronger in a post-COVID world? Now, you said you have these online digital assets. Is that I mean, how are you guys going to be better positioned now, pre-COVID versus post-COVID? I know you launched all these digital in-home fitness experiences. Anything else that you would like to share?
Totally. I think it's, a couple other insights. It's funny. I just got asked this yesterday at our company all hands. The silver lining, I mean, obviously, again, running a predominantly offline fitness business in a pandemic is catastrophic. Our revenue just declined precipitously. However, because we have the balance sheet to get us through, and we did have to take action, we had to let go a bunch of employees. It was incredibly painful, the worst experience of my career for sure. But the silver lining of it is we've been able to renegotiate most of our vendor relationships and reduce our cost structure pretty significantly. We've also been able to just launch a digital product, and that's always been on our roadmap, but wasn't even something we were planning to do in all of 2020. So accelerated that. Yeah. And then it's also given us a chance to step back and work on some core infrastructure improvements and some optimizations that are less optimizations and more sort of revolutionary versus evolutionary. When you're running a business that's just growing each month and you've got these insane growth targets, you're really focused on tweaking the dials to just hit your numbers and maintain that really robust growth. When your growth is catastrophically whacked, you can step back and say, okay, rather than the thing that's going to dial up my growth rate by a few percentage points, what's something that could actually change our trajectory altogether? So we've got a number of projects going on there, which, things like letting studios and gyms sign up for ClassPass without having to go through a human, or letting a corporate HR person enroll their company in ClassPass without having to go through a human sales force. So I'm hoping that we come out of it, and not to mention, a lot of our competition globally, didn't raise $285 million in December. Right. So I think from a competitive standpoint, we'll be in a better position. So I think competitively, sort of OpEx leverage wise, and, our ability to go pursue new adjacent businesses like wellness and video and digital. I think we could come out actually at a higher valuation when we ultimately IPO.
Yeah, I think so too. So thanks for that, those insights, Fritz, as it relates to ClassPass. Switching over to Fritz, the angel investment ninja. Tell our viewers and entrepreneurs the best piece of advice you can give people who are raising seed and Series A in today's environment.
That's a good question. Yeah, I don't know. The best piece of advice in today's environment, I would just say, I wouldn't be too precious about valuation, terms. I would just get money in the bank. In times of great uncertainty, half the battle is just having the ability to take the shot on goal. And people say don't celebrate fundraising, and I think that's total bullshit, because fundraising puts you in elite class. Very few people get to take these shots on goal, and really pursue a thesis and run these experiments. So I get money in the bank however you have to. And ideally you run a really competitive process so you can get good terms, clean terms, and great investors and at an attractive valuation. But I've also seen people try to get too cute and, over optimize for valuation, or, over optimize for a brand name firm. And, I don't think, no disrespect meant to our VC friends. I'm an investor, but ultimately the investors can help, but they're not going to make or break the company. So I'd tell people just get the money in the bank, because we are not through a period of uncertainty at all. We're not even on our second wave. America is still on its first wave of outbreak, as is the UK. And, we might be in this situation for another year. And I don't know how much stimulus, the government can keep coming up with, to combat the sort of deflationary effects of, people not spending as much.
Got it. Do you think that angel investors will approach investing differently than institutional investors traditionally in this new environment? Is there a change in kind of investment mindset? I've seen some institutional VCs kind of retain what they have in their fund so that they can do follow-on investments versus earmarking part of those investments for new startups, because they're just trying to figure out which companies are going to stay alive or weather through. So I've personally seen institutional investors kind of change their mindset. What's your thoughts?
Yeah, I mean, you would know better than me on the institutional side. I mean, I try to make intros for my portfolio companies, but I would segment it between angel investors and institutional investors, not necessarily by stage, because now there's a lot of institutional investors even at the earliest stages.
Yeah.
Like in my mind, an angel investor is somebody who's investing their own money, and their reason for doing it, yeah, of course, we want to make money, but we're also doing it for learning, for fun. That was how I started, and got really lucky early, and now I'm reverting to the mean with a bunch more investments that haven't been as good as some of my earliest ones. But I don't think angels have changed a ton. I mean, we tend not to be as sort of structured in our investment theses and swim lanes and stuff. It's really when people have outside capital that they have a fiduciary to their LPs, and maybe their behavior is changing quite a bit. I could see people, all my VC friends say they're not sort of slowing down and they're still open for business, but I feel like everyone's a bit on the back foot right now. And that may be true of angels. Most angels, not me, but most real angels who are bigger than me and made a lot more money, they have enough money that I think they're still firing away on any bet, any idea, any team that looks interesting. So, I certainly feel like institutional investors are on their back foot, perhaps for good reason, especially because they can't really meet teams in person and stuff like that. So, I think you'll see it all across the board. The good news for entrepreneurs is even if institutional investors are on their back feet, like they were in 2008, like they were in 2001 and 2, the amount of institutional investors competing for deals now has grown an order of magnitude since 2008. And so I think there's enough capital out there for good stuff to get funded no matter what.
Got it. Fritz, personal question. What type of angel investments are you most interested today, right now, and why? So you have a massive portfolio. Are you still, and I know you're still investing as an angel, what would be most interesting for anyone who's listening who might want to share an investment with you or a pitch in the future? What are you looking for today?
I'm not one of these guys who has, I've been wrong so many times in my career, whether, I've been working in corporate strategy at Microsoft or as an investor or as an entrepreneur, that I am not one of these investors who has this is what I think the world is going to look like. I'm not a thesis-driven investor very much. I'm going to have my own hypotheses. I tend to be more an exception-driven investor. When I meet just an exceptional team, a really unique idea, or an idea that I think would sound terrible, but has traction with a hardcore group of, fans. Pinterest was like that. My friends from college started Pinterest. I didn't get it. I tried the product. I'm like, I have no interest in using this. Then I showed my wife, and she was like, this is the best product ever. And I'm like, holy crap, she's worth a heck of a lot more to the economy than I am. So if she likes it, then this is going to be a good winner. So I tend not to be thesis driven. I tend to be, more just looking for exceptional founding teams, ideas, or traction. I have a bit of a distaste for hardware just because I did a hardware company that was an epic failure, and after almost being a huge success, and I just know how hard
that was Doppler Labs, right? Doppler?
Yeah, Doppler, yeah. It was a bionic hearing company.
You were actually, that was the first time I had heard of a smart wireless earbud, and now it was the first time that trend with AirPods and everything else. A couple years, maybe a little early, but yeah, hardware is tough. But that was an incredible product, and I loved the Doppler. Earbuds.
I'm super proud. We almost had a great exit. I'm super proud of everything the company did in terms of pioneering the hearable space, destigmatizing hearing aids and so forth for that demographic. But ultimately, startups are really freaking hard, and when you add hardware,
hardware on top,
the hardware development, the production, manufacturing, supply chain, you're making it exponentially harder. So my bar is super high for hardware related things. I don't do a ton of healthcare, so I really like SaaS and consumer internet. But if I'll do anything, I try not to have too many rules.
That's kind of like myself. I'm pretty opportunistic. Early stage, it's all about team. Can I wrap my head around the business model, and do I believe in the market opportunity, the future market opportunity? So it sounds pretty similar. How do you and ClassPass founder Pyle manage your business ninja duties?
Oh, that's a good question. So so Pyle started ClassPass. I led the seed round way back when it was pivoting into ClassPass. Pyle had been working on it for years. And company started to scale. I then ended up through a weird series of bounces, leading the Series A, co-leading it, and becoming the exec chair. So kind of adopted the company as, I wasn't technically a co-founder, but Pyle wanted me to spend more time on it. So she recruited me into that. And then she asked me to actually co-operate the business. So I was on the ground operating it. And after doing that for a while, she was like, hey, you're the CEO. I'm acting like the chairman. So our roles really just naturally and organically evolved. And I mean, she's my partner. She's the founding vision of the company. I've contributed. We have different backgrounds. I have a bit more of a technical background, and so I'm more, I'd say, focused on the operations of the business and the tech, and she's more focused on the marketing, the branding, the user experience, just kind of voice of the customer. So, it's great. It's a great partnership.
Excellent. We're almost towards the end of our show, this episode. So I'm going to ask you a few fun questions. We all have cravings, food cravings. This has been a pandemic. I don't know how long you've been stuck at home, but what have you been craving to eat the most during the pandemic? Where's the first restaurant you love to go to? And it doesn't have to be local. It can be, let's keep it in the US. Where would you go if you could go eat anywhere?
That's a good question. Yeah, I was going to say pizza, but I've been able to eat pizza while in lockdown and even learned how to make pizza. That's been a silver lining. Favorite restaurant? I really like this Italian old jazz pizza place in New York City called Arturo's, and it's very decadent. It's not like highbrow, super fancy Michelin star kind of food, but just really great Italian, old school New York place.
What's the dish?
I think that's.
What's your favorite dish?
I get a pizza and a pasta.
What's the pasta?
Tortellini bolognese.
Okay, I'm going to be in New York, I think, next month, or I'm going to be, I think, in New York end of July. So I'm going to take that tip and I'm going to go there.
The other one that I have been really craving recently is sushi, because I haven't really been getting takeout or delivery, and in Montana it's not that great. But Shiro's in Seattle remains to this day my favorite sushi restaurant.
Got it. What's your favorite read as of late?
I haven't actually been doing very much reading. It's kind of embarrassing, when this question comes up, because most of the reading I've been doing nowadays has been, blog posts or industry reports and stuff like that. But the last book I read, which is, I think, one that people would find good inspiration with, I reread it, is Endurance, which is about the 1906 Sir Ernest Shackleton voyage to be the first explorer to cross Antarctica. And it's one of these page turner adventure stories. And, you'll read it in about 2 or 3 days, but, everyone feels a little bit down these days because of COVID and being quarantined. And I like to read books about, these explorers enduring incredibly gnarly conditions, or books about World War II soldiers or Vietnam, because it really puts things in perspective. This is our generation's greatest challenge. We're actually pretty lucky relative to some of the challenges other generations of people have been through.
Got it. Thank you for that. I'm gonna add that to my reading list. 2 more quick questions. What's your favorite workout, given that you're the CEO of ClassPass?
Yeah, that's a really tricky political question, because I have 30,000 partners. Or
the sort of method. What's your method type of work? I'm not saying it. Where's your favorite place to go? But what's the general type of exercise training? As a CEO of ClassPass, I'm sure people are interested.
I'm not. I'm actually super, super flexible, and I'm not just saying that. Like in San Francisco, my favorite place is Golden Gate CrossFit. It's a CrossFit place. They have a class called Booty Fit, which is sort of embarrassing when you book it and your friends see it, but it's an incredible CrossFit class. In New York, I think my favorite classes are Rumble Boxing, Barry's Boot Camp, Aerospace Boxing. I like the boxing workouts. So I actually got fight.
Do you do spinning classes?
I used to go to Peloton. I had a Peloton at home. I couldn't get into it, but I like to go to the Peloton in studio classes. And now at home, I have a tonal for weightlifting and a fight camp, which is a connected boxing thing, and they're both great products too. So I like to mix it up.
Awesome. That's kind of like how I feel as well. A little sometimes a little Pilates, sometimes a little yoga, some training, some boxing, a little mix of everything. Final question, Trump or Biden?
Well, since I care about, saving the economy and a stronger COVID response, I'm a clear Biden guy. Also, because I value human rights and civil rights. So, pretty easy decision.
You got it, of course, brother.
Yeah.
Same.
Hey, I see that a question came in on LinkedIn. Can I just take it real quick? Because Sandra says bring in the dancing class, which sounds fun. Maybe we'll have to promote one of those. But Maya asked, I love the rollout of live stream on ClassPass, but didn't have enough credits to take them as you paused my monthly. Can you make it easier to add credits? Also, studios keep trying to get me to go to Mindbody. Can you talk about this competition? Ooh, good meaty question. So first of all, you should be able to just add credits. Like if you go to buy, either go to your profile and you can add credits to your bank, or when you go to buy a live stream class and you don't have enough, it should just say, hey, do you want us to top you up or buy a bundle? But sounds like we have some user experience improvements to make there. And then Mindbody, we have a good relationship with those guys. Our business couldn't have scaled as quickly without Mindbody having an API that we're able to access. We've paid them a lot of money over the years for that privilege. They do have a consumer direct booking thing. Our thing is actually more about subscription and much lower prices. Studios are willing to offer, 50, 60, 70% discounts through ClassPass because the prices are hidden behind the subscription wall. That's not true of live stream right now because we just got that thing up really quickly. But you should have, we also have like Mindbody's consumer booking system would be like using Spotify with only Warner Music, right? We have not just the Warner Music catalog, but the Sony catalog. We have 20 other software integrators beyond the Mindbody studios and gyms that you can use. So that's why I encourage you to use us.
Great. Thank you so much. I think that is the end of our episode today, episode 2 with Fritz Landman, our special guest of the day, CEO of ClassPass, who's given us a lot of insightful tips and wisdom. He's a true business ninja. Love you, Fritz. Say hello to the family.
Thanks, man.
And
love you
we'll
too.
hopefully be able to see each other soon. And I'm going to eat at your favorite Italian restaurant when I'm in New York end of next month and make you jealous by sending you a picture.
Please do. All right.
Thank you, everyone.
Pizza.
Right. There we go. Thank you, everyone. And thank you, Social Live and Tori, for helping produce this episode. She's in the background right here. Thank you for all your hard work. Everyone,
thanks, Tori.
Thank you very much.
Thanks, everyone. Bye.